On Friday, we got hit with the candle of death. Take a look at the S&P 500 and the Nasdaq dropping 4% in a day. And just take a look at this hourly candle. I mean, that is the most just clear selling candles that I have seen in a very long time in the Nasdaq. And of course, this came in reaction to tariff wars 2.0 question mark. Actually, if you know your market history, this is more like 3.0. In 2018, Trump had a big war with the Chinese over not an actual war, but a trade war, right? An economic war. And then we, of course, had the earlier session in 2025, the April sell-off. And then, of course, we got something on Friday, and it was a absolute bloodbath out there. I mean, everything was red. We had the Nasdaq down, you had the Dow Jones down, the Russell was down 4%, the German DAX, this was global, right? The Japanese stock market dropped almost 7% on the day. The Chinese stock market dropped 5%. The VIX roared 32% at one point to the upside in a single day. The question I have for you guys, and I would love to ask you guys this in the comment section, is this the real deal 3.0? Are we going to see another substantial market slide? And again, I really want to ask you guys, weigh in on the comment section. Just give me something in the comments. Do you think that this is a buyable dip? Yes or no? Do you think you buy this dip soon, or do you think there is more room to come to the downside? In today's video, I will be answering that question from my own opinion, my own system, and my own trading. My goal with this video is to get you prepped for the week ahead as I share my own prep for the week ahead. If you enjoy my videos and they are helpful to you, do me a big favor and yourself a favor, hit the thumbs up button, subscribe, and that will let YouTube know you want to see more of my content in the future so we can take on these markets together. Without further ado, let's jump in. So first and foremost, I want to talk a little bit about the news that we got. Of course, Trump is essentially warning, well, actually not warning, he has imposed new tariffs to come into effect November 1st of this year. I believe it was a 100% tariff on Chinese goods. And the last time we had this type of news, let's take a little bit of a history lesson by scrolling back in the chart and looking at the beginning of the year where Trump got real strong on Chinese tariffs and all the trade war stuff that we saw earlier this year. The stock market dropped almost 22%, guys. Now, of course, it rebounded when Trump sort of took a lighter tone, but that lighter tone just got thrown out the window. So the question is that another, sort of just a negotiation, hardball tactic Trump is taking, or is this truly, is he done with the negotiation? Is he done with trying to play nice guy? That, I think, is what made the market freak out so much, because if Trump, let's just make an assumption for a second. This is a big assumption. But let's assume Trump was as serious as he came across. Now, the last time that the market dropped, I made the point that I didn't think he was actually as serious as he was putting off. And I was correct in that. I did really well on the rebound. But this time, is it different? If Trump is coming out and he's already played this game once, and he said, hey, China, if you cooperate, we'll find a way. We'll make a deal to make a deal. That's what happened in the rebound. And so markets have been operating under the guise of, okay, well, they're going to make a deal. It's going to be fine. They're going to work it out. Well, if Trump just put his foot down and said, we're not making a deal anymore, it's not working, we don't need you, and China is saying the same, China's saying we don't need you, and US is saying we don't need you, who's the big loser in all this? Stockholders, because stockholders would take a huge hit. So making the assumption that Trump is very serious, and so is President Xi, if they are going to get in the boxing ring, which I think we would all pay to see, if we could see them physically, anyways, you see my point. If they're back at it again, yeah, there is more potential downside for this market. But is that a fair assumption to make? Well, I'm going to share with you exactly my plan, because I am actually going to make the case, and I know it's kind of crazy, I actually think the dip is definitely buyable. That is my opinion, and I'll back it with my own strategic reasoning as to why I take all of my trades. I don't leave it up to guesswork or gut feeling with my trading. I have a system for a reason. So let's just take a look also at the gold reaction. Gold launched to the upside. Does this mean gold has more upside? Well, we know gold loves a little geopolitical drama to keep the story going. And so I do think gold could continue to melt higher. I've said this for some time. There's just no trying to call the top on gold for me. And so where I actually am more intrigued and actually took a initial position was a long position in the NASDAQ. Now, I know this chart looks horrible because the CFD closed before the stock exchange actually did. If we take a look at my position, and I'll show you, this was my first attempt to get long on the QQQ. This is the NASDAQ ETF. I bought this thing. I clearly was too early to my buy as the stock or the ETF dropped further. My stop loss was right here. I actually need to put it back on. The reason it got taken off is because I forgot to do a good till canceled order. I just did good to the end of the day stop loss on my order, but I'll put a trade in there in just a second. So the cool thing about how I have been positioned, and viewers of my channel who have been here every day with me, you know I've got to take a little bit of just a little bit of reprieve from the harassment I've been getting in the comment section, where I've been mentioning that I've been really cautious on stocks. Now, I do not want to say with any sort of definitive nature that I knew this was going to happen. That is completely nonsense. No one knows when Trump is going to say something crazy. No one could account for this, and that's why the move is so big. You get these kinds of moves when something shocks the market, and we got a shocker. So I'm not going to claim that I knew this was going to happen, but if you've watched my videos, then you know very well my positioning, my bias on overall indices, stocks and as a whole has been bullish, but waiting for pullbacks. Well, I believe that we got our first pullback. Now, I want to make clear that my first attempt here looks like it's going terribly wrong, and I couldn't be happier about it. What? What do you mean? Let me explain. Well, I've been really light in my stock market portfolio, my main portfolio in positioning to the stock market. Let me show you. Like most people, Friday was a red day for me in my P&L calendar, but I was down 0.7% in my portfolio. And the reason I bring that up is that 0.7% is not a great day by any means, but it's a whole lot better than down 4%, down 3.4%. And in my high risk portfolio, I was down 7% on Friday. Now, the high risk portfolio is something I keep more private, and it is a very small portfolio. So full context there. But I wanted to show you this because this is what I mean when I say I don't have a ton of allocation to stocks. Did I have a red day too? Yes, because I own some stocks still in my portfolio, and I have some risk on trades that are going, but I was more than happy to see the sell-off on Friday, not because I know there was a lot of people who had a really painful Friday, but because I've been sitting on the sidelines for a little bit, waiting with cash at the ready. And I took my first attempt. I'm still in the trade, and we'll see how things open up on Monday. But I took my first attempt on QQQ, which is a good-sized trade, but it's not huge. And my beta to the market, if you're familiar, is pretty low. Essentially, what I mean by that is that my, if the market's down right now, another 3% on Monday, my portfolio will probably be down 1.75% or so, which again, so I'm still allocated less heavy than perhaps just people who have just leveraged into, the NASDAQ. And I want to just be clear. There were people on Friday who got absolutely devastated, got wiped out, because a lot of people have been chasing this market with leverage. They're playing call options, they're, buying cryptocurrencies, meme coins. I mean, there's a lot of froth that got worked off in a single day in this market. And so I took a first attempt long on the NASDAQ. Let me show you why with something that I am so excited to talk to you guys about. I have worked on this all weekend long, and this is something that, well, I shouldn't say weekend. I've worked on this all week long with my developer, but we've got something cool. Today, we're looking at the brand new, not fully finished Edgefinder AI scanner. Now, for those of you guys who don't have Edgefinder, this is still going to be useful to you, even if you don't purchase the Edgefinder. My goal is to help with my videos, even if you don't buy the Edgefinder, to give you a little bit of my insights as to why I think something could go up or down. What we're seeing here, and this is the first time I'm ever doing analysis with this, so this is fun. We're getting a very bullish rating on the NASDAQ. We can break this down by section to make this really easy. The technical uptrend on the daily chart, I would argue, is still intact. More on that in just a second. What about institutional activity? Now, we are a little bit outdated with our COT data, but we do know that the latest change that we've been seeing has been bullish, and COT data for the NASDAQ specifically, as that's what we've got selected, is neutral. Retail sentiment is giving a contrarian bullish signal, and if we take a look at economic growth, we still have a pretty resilient growth story. Jobs data, not so great, but inflation data also not too threatening. So this is where you can kind of see the edge finders under the hood thinking very much summarized, and keep it surface level so that we don't get too complicated. This is the point of this new feature, is to show you the edge finders reasoning, and eventually this section will be really cool. It's going to be an AI summary. We've got this in the works. My developer on this is working pretty hard to bring this to life, and I'm really excited to share that with you guys when it's ready. We also have some targets in general, but what we can see here is this is a general overview of the NASDAQ. And so, yes, I actually think this dip is buyable. Let me defend my case that I think the stock market is still in an uptrend. If we apply some moving averages, what we can see here is that on Friday, we took over the 20 period moving average. We tagged the 50 period moving average, and that was actually right around where we turned around, at least on Friday. And again, by the time we get to Sunday market open, we could gap lower than where we currently trade. But when we look at the 4-hour chart, which shows after hours trading, right? After hours trading in the US stock market, we did get a bit of a reversal. We'll see. Will that have some sustainability to it on Monday? We'll have to watch and see. But again, I actually think that the dip is buyable on the NASDAQ. Why? Well, yes, there's Trump drama. Yes, there's tariff drama. But just like in March, April, and May, I actually took that as an opportunity on a bigger picture. I bought some stocks for the longer term. But I think that you're not going to be very easy. Let me make this case. I think you're not going to easily fool the market the same way twice. And what I mean by that is I made this point to my video editor. We were talking about this on Friday, who also watches the stock market with me each day. Check this out. In the weeks, let's go back in time for a second, and I'm just going to look at simple price action. In 2018, the stock market sold off really hard when Trump went after China about tariffs. It was a big, sell-off that we saw in 2018, and the stock market dropped hard on that, about 20-something percent, 24, 25% for the NASDAQ. Then earlier this year, we saw a similar sized drop. But what I wanted to express to you is that the first time around, it was really US versus China only. And it sold off about 25%. We sold off a very similar amount earlier this year, 25%. The difference is it wasn't just US versus China like it was the previous time, which caused a 25% move. It was US versus the whole world. The whole world was under the scrutiny of Trump and his administration and what they want to do with tariffs, etc. Again, the point is, the second time we had the same drawdown, 25%, with a bigger catalyst, I would argue, a more global international catalyst, and we had the same drawdown. What I mean by that, it took more the second time, more drama to get the same move the second time. So if you think this is my case, and we'll see if I'm right. I could be early, I could be wrong. Not financial advice, just some guy on YouTube. My case would be that for you to get another similar move of 25% down in the NASDAQ, you would need something even more dramatic than what we saw in April. And I don't think that that's what Friday was. I do actually think that there is a dip to buy here. Now, it may be early, and if it is, I'm glad. I actually would like to get a bigger position and build out my portfolio again at lower prices. So this is a trade. I think the NASDAQ could have a bounce, so that's why I went long. But if it doesn't, if it keeps going lower, I welcome it, because then I can start building out my portfolio with stuff that I like for the longer term. I know that was a long, convoluted answer, but my opinion is actually, yes, there is some buyable dips within this market. I think that, this area, this 38.2 to 50% retracement level is my first attempt to get long. But let me make it very clear. This is going to be a potential campaign for me. So attempt number one is here. Attempt number 2 is likely to be the 61.8% retracement. Attempt number 3 for me on the NASDAQ, barring the technicals still look okay at the time, would be probably a move, a 100% retracement of this September rally that we saw take place, right? September was an incredible month for the stock market. We rallied in the NASDAQ from the lows here up almost 10%. So if we correct that, that's going to be looking like a pullback of around 8 to 9%. I think that is a very viable dip. And I actually already took the attempt, my first attempt to get long on Friday. Now, again, was I too early? You let me know in the comment section, because again, I was early over here. And so maybe I'm going to be early again. I ended up, when it was over here, I was same very eerily familiar situation. I was very cash heavy in my portfolio, and I missed the first part of the dip. I started buying stocks around here, bought more stocks, bought more stocks, bought more stocks. Ultimately, the rebound was very profitable for me. But I missed that first leg, which was the good part. Then I got in a little bit too early. So will I make the same mistake twice? You let me know. I've done this for a long time. I'm not going to change what I do based on YouTube comments, but people always have their opinions, and I welcome you to share yours down below. So when it comes to the S&P 500, and I actually would ask, like I said earlier, I do ask for you to let me know and to share with the community. Do you think this dip is going to be a bigger dip, or is this just a dip? Like, is this a dip, or is this, the dip before it keeps dipping kind of thing? Anyways, let's move on, because we've got a lot to cover here in this video. Let's take a look at the S&P 500. And what we'll see here with the S&P 500 is that we do still have a pretty positive score. Let me just go reset here. We do still have a positive score for the S&P 500. A +5 reading gives us a bullish reading overall on the Edge Finder, but it's not nearly as convincing here for me as the NASDAQ. So I'm going to probably skip the S&P 500, but because it is such a popular index, I do think that you've hit the 61.8% retracement. This is a very strong technical level. My best guess is that following such a big sell-off on Friday, I actually think that people will step in and buy this dip. Again, if I'm wrong, then I'm going to stop out and manage risk. And I actually low-key kind of hope I am wrong, because then I can build bigger positions in stuff that I like for the longer term. There's a bunch of ETFs and individual stocks that I want to add to my portfolio. So by the way, look at the sea of red in individual stocks. Just a bloodbath on Friday. And that's just the stock market. We also had crypto. I mean, it was a crazy, crazy Friday. And again, I was more than happy to be down about 0.7% in a market that was down 3.4, 4.4. I mean, it was, again, Armageddon for a lot of leveraged traders. I mean, people who were leveraged up here, again, Friday might have been a wipeout event for a lot of people. And again, I don't wish that on anyone, but it is something that I have been on my channel warning people about. Like, you have to be careful chasing a really expensive, frothy, and euphoric market. We've talked about this for a while. When it comes to sentiment, we can actually dive a little bit deeper, breaking things down under our market sentiment tab. We've talked about how, again, on the put to call ratio, we've been seeing some pretty strong readings. Of course, on Friday, we completely flipped. People got scared on Friday. You can see the put to call ratio ramped higher, showing a high volume of puts came into the market, obviously, as we dropped in the S&P 500. But before then, we had people out there buying calls like crazy. We also saw this in the AAII Investor Sentiment Survey. Frothiness has taken place in this market, where buyers, bulls, have been building positions. They've been very euphoric. They've been optimistic. Sell pressure, or sellers' interest, has been declining. We've seen this coming. Now, again, we didn't know where the top was on these markets, but we knew in my channel, if you've been watching, that we've been cautious because sentiment has started to get really bullish out there. And so again, I think that Friday may have actually wiped out a lot of the kind of leveraged players in this game, and I think that may actually be a buyable dip, the buying opportunity. Now, again, I don't want to just make my case because, again, we've hit some technical levels. There's other things at play here. Like, for example, the annual seasonality of the S&P 500, showing that historically you actually get a strong rally in the end of year. I still think this is very much possible, even though you got a sell-off and the market freaked out on Friday. That fear, in my opinion, is buyable. And so that is my take on the S&P 500, the NASDAQ, etc. But I'm not just doing it because, hey, it's not just a technical level. There's seasonality at play here that I think could be bullish. We also have, in terms of the U.S. economic heat map that we've been talking about, a case to be made for strong backdrop for stocks. We have, for example, strong GDP growth in the United States, which we've been talking about. Manufacturing PMIs came in better than expected. Inflation is still sticky, but the Fed's expected to cut rates anyways because we have a little bit of softness in the jobs market. So we could kind of take these one for one. You could say a little bit of stickiness in jobs, in inflation, but jobs data, little soft here. So let's just go one for one because the Fed's got a lot of room to cut rates. Interest rates are pretty high relative to last 10-year average. So, we'll take that with a grain of salt here that we do have a little bit of stickiness inflation. We've still come a long way from the 9+% inflation in the US. We're down to 2.9% in the CPI. Again, retail sales numbers came in strong. So again, the overall story here for US stocks based on the economic data actually looks okay for me here. Now we can see that in my new scanner here that I showed you earlier. The economic growth sector or section of our economic reads, that's where we're getting the most bullishness. We're also getting it in inflation, which has not been, it's been rising, but it's not been dramatically rising. It's a little up. We'll see what happens, and we'll have to keep an eye on this. But right now, your economic growth and inflation signals are okay for the S&P 500 and for the NASDAQ. Jobs, you have a little less to look at. But that's my take overall. I'm bullish on the indices and I'm welcoming this dip as I've been sitting on some cash and I'm ready to start playing the dip. That's my take on it. Again, feel free to disagree with me. That is the beauty of markets. In order for someone to take a trade, somebody's got to think the opposite, right? So that is the whole game is there's people who think differently. And if I was right all the time or anybody was right all the time, it wouldn't be a marketplace people are participating in. Sometimes you're right, sometimes you're wrong. It's how you manage it and how you maximize winners, minimize losses. So again, we'll see what comes next with it. There's more stuff I want to talk to you guys about. The dollar index also dropped here. We had a pullback on the daily chart of the dollar. You guys know if you've been watching my videos, I am also bullish on the dollar. I went long right around this area. I bought UUP. I'll show you my position on that one. Gave back a good bit of the profits that were floating on this on Friday. Again, what is this after hours stuff? The dollar, I don't know if that's, I think that might have been on, yeah, that's like low volume trading. So I would ignore that big spike that you see in the dollar. We did come down on DXY. And basically, in my view, I think this is, again, another buyable dip. I'm going to make the case that I think that the U.S. dollar on a dip, if we do see it this week, is an opportunity to add positioning to my dollar plays. Specifically, let's take a look at some of our top setups when it comes to the U.S. dollar. And I'm going to just filter here in my system. I'm going to go major currency pairs. By the way, if you want to explore the Edge Finder, I should have mentioned this earlier. You can find information on this tool that I'm using down below in the description. And for current Edge Finder users, the new market scanner that I'm working on, it is still under development. So I'm finishing that up. My plan is to have that available sometime to general population that is using the Edge Finder within the next few days. So stay tuned on that. But anyways, let's move on here. AUD, USD, USD CHF, dollar CAD. Let's take a quick look at each one of those from a technical basis. Dollar CAD, if we were to get a pullback on this one, I love the idea of starting a long position here. I'd prefer, to be honest, to wait for a deeper retracement as I do already have some dollar long exposure. Dollar CAD at a pullback to this 61.8% retracement. If you do get a little fear in the dollar here, that would be a buy the dip opportunity for me. Dollar Swiss, I already went long. I was too early to this, but I bought this, believe it or not, off the monthly chart. We tagged a long-term level of support. I do think that the dollar Swiss is getting some strong readings here within the Edge Finder, a +8 score. Economic data favors the US dollar here based on what we already got done discussing here earlier. The growth metrics, the jobs metrics, not so great, but the inflation metrics. I mean, overall, I think the Fed's going to cut rates, but other places I think are going to cut rates more. So that's my take on the dollar. I am bullish. Let's take a look at AUD USD, AUD USD. And again, when I share these ideas, let me just be very clear that I'm not always right. And as a trader, I am wrong often. But I've made consistent money in the markets, not because I'm right all the time. Like, trust me, you ask the people who don't like my content or who point out when I'm wrong, they'll always have conversations to start because I am wrong pretty frequently with my ideas. Every trader is, actually, whether they care to admit it or not. We're all wrong pretty often with our trades. It's really hard to predict what the market's going to do. And when I say wrong, win rate is not what I'm referring to. If I were to take this trade, for example, and put this stop loss here, and then my take profit right here, you could say I'm right all the time, but that wouldn't really be saying much, right? Because when I lose, I'm going to lose a lot of money relative to the wins that I have, right? So I'm not talking about win rate. What I'm talking about is your net P&L over time. No one has a perfect net P&L that goes like this without any drawdown. Now, your balance could do this if you held on to losers forever, but then your equity would look like this sometimes, right? So again, nothing about trading, nothing about investing, nothing about financial markets is easy. Let's keep going with the ideas. And again, as always with my videos, my goal is to share my thoughts and what I'm doing in the markets, not tell you what to do. So again, you should have your own system and strategy. And if you don't, you should probably not be trading. My videos, my goal with them is to share my insights to hopefully help you think through your own kind of procedures, how you're going to take on the markets, not necessarily tell you like, hey, buy here, sell here. Because again, that to me, if you don't understand why you're doing what you're doing in markets, you are destined to lose a lot of money. So take ownership of your trading. Don't be looking for people to tell you what to do in the markets. If my analysis helps to add some clarity to your own, then beautiful. That's what my videos are for. Anyways, the Australian dollar, beautiful, beautiful sell-off on Friday. Broke through those lows. Again, I think that you had the dollar freaking out, but this is an interesting move, right? Because you have the dollar losing a lot of value, but there's other currencies that lost more on Friday that freaked out even more. So like you had, for example, dollar yen dropping. So the dollar's weak here, but the dollar's really strong over here against the Australian dollar. Why? Why did the Aussie dollar get such a beating on this? Well, because AUD represents Australia, and Australia, of course, does a lot of business with China. If Chinese trade stuff is under jeopardy, so too is the suppliers of Chinese goods, right? Australia sells a lot of stuff, a lot of raw materials, commodities, et cetera, to China essentially kind of is a part of that funnel, is a part of that process of exports that go internationally. If the trade war stuff negatively impacts China, by proxy, it negatively impacts the Aussie dollar. So we saw a big sell-off in the Australian dollar. I'd be a seller on strength here. Personally, looking for a continuation lower. Love to see this price action to the downside because I've wanted to be short the Aussie dollar anyways. We had some interesting moves across the currency market. Kiwi dollar also lower on Friday. I do have a small short position that I'm stuck in the Aussie dollar against the Kiwi dollar. Had a really sharp move here lower, down 133 pips from those highs here. Kind of interesting. Euro dollar actually looks interesting, although I don't have a signal in my system. If I go take a look at my screener here specifically for the euro dollar, let's pull up euro USD. I love having this search bar too. That makes it really easy. So euro dollar is actually getting a -5 score. I'm not sure why that's not getting a bearish reading. Something might be bugged here, so apologies on that. Like I said, this is still finishing this up. Anyways, we have something interesting here. Technicals look bearish. Institutional activity looks net bearish overall. If we take a look at the jobs data, favors Europe. If we take a look at inflation data, favors Europe. Specifically the euro versus the US dollar, remember, and economic data for growth favors the US. So kind of mixed here. Don't love that. And again, I think there's so many trades out there for this next week, in my view, that look better than euro dollar. So I'm probably going to skip this one. We'll also just take a quick look at pound dollar while we're on the subject. Pound dollar is a little too mixed for me as well. Totally going to skip that one. From a chart perspective, pound dollar looks pretty choppy, but you broke through some support here. We could actually clean this level of support up. You broke through support. Let's see if this behaves as resistance going into this upcoming week. But yeah, Kiwi dollar, pound dollar, euro dollar, some of those I'm going to just skip in favor of the ones that I think, or don't think, but have better scoring within the Edge Finders screening. So yeah, let's also just kind of clean this up here. I'm going to take out minor currency pairs and let's take a look at what else we have. So NASDAQ, like I said, is a very bullish setup for me. Why am I so confident in taking NASDAQ longs? Well, first of all, I'm taking small NASDAQ longs because, again, we don't know how much this drama is going to play out, but I like the overall fundamentals, the technicals, and the sentiment. The news stuff, I'm mostly ignoring for my trading setup. And I know that's crazy, but none of us can predict what Trump is going to say or do next. He might say something really positive. He might say something really negative. So I kind of wash it out, meaning I ignore it. And instead, I focus on what I can look at: the economic data, which, again, we're a little delayed on this, technical due to the government shutdowns, technical data, which looks positive. Overall, I would argue, again, the NASDAQ I showed you in a bullish trend. And sentiment data also, crowd sentiment got real scared on Friday. I'll take that as a possible dip buy. When I say crowd sentiment, remember the put to call ratio. We saw this thing absolutely skyrocket on the S&P 500. I'm not sure, we maybe didn't get updated data here. Let me check. October 9th. Yeah, we might have missed October 10th data, which October 10th data, very likely, if it's like the S&P 500s, is going to be a shoot through the highs here on the put to call ratio as people freaked out, bought puts, went running for protection. That's, again, another reason why I think the contrarian play here is actually to get long with a stop and to manage risk on stock indices. Keep an eye on crypto for the rest of this weekend. It has a huge kind of indication of how the market will open up. So far, it's pretty red here this weekend, but of course, I am recording this on Saturday, so keep an eye on it on Sunday. Oil prices slid huge here, down 5% on Friday. I mean, these are massive moves here, guys. And I'm going to say this. I said it this past week. I went long U.S. Oil through a proxy. I went long XLE. This is in the energy sector. I stopped out of this trade, talked about it on Friday, stopped out, and thank goodness I did, because this thing kept going here. From a longer term perspective, I still like oil. I actually think oil is a bigger picture, longer term potential buy, but the technicals look horrible now. If we take a look at U.S. oil here, again, technicals look really rough on the daily chart. We've lost all that momentum. I tried again. I tried to get long over here. Ended up taking a small loss. Stopped out when we faked out and failed. I stopped out here. Went long XLE. So with oil prices crashing down on Friday, stopped out of that. So I've not had a great run with oil here recently, but I'm controlling my risk and I'm looking for the bigger picture theme, which I think if we scroll out on oil prices, bigger picture. Going back from 2020, I know that sounds like a lifetime away here. We can draw some long-term fibs. Sitting at the 50% retracement level, maybe we have one last ditch move down to the 618 retracement. $50 a barrel oil sounds like a bargain to me personally, unless you think we're going into a recession. If you think we're going into a recession, then $50 oil prices will actually sound cheap. But again, I don't think we are. And I think that, yes, you had the panic announcement on Friday. Oh my gosh, tariffs are back. But again, I don't know that Trump and team really want to engage in, starting almost a potential World War III event by essentially declaring trade war big time on China. I don't personally, and maybe this will age poorly, but my bias is that I don't think that that's likely to happen. Now, if I'm wrong, let me be very clear. This is what makes the difference between being a pure gambler, somebody who's trading off a hunch, from somebody who is trading with risk management. If I have that idea and I'm wrong, I'm not going to let it destroy my account. I'm going to take small attempts. If I think the world is going to be okay and we are not going to fall apart from this, and that this is just another Trump dynamic. We've seen this a couple different times. If I'm looking at history, I'm saying the last several times this has happened, this is a dip buying opportunity. So I'm going to treat it like that. And if I'm wrong, am I going to lose all my money? No. The only people who are going to do that are people who leverage up and make a huge speculative bet that the stock market's going to crash or rip back from here. Don't be that person. Like, there's a lot of that. Trust me. There's people who are watching this video right now. But for a lot of us, let's just be rational and say, okay, Here's what I think is likely to be the case. I don't know that that's going to be the case. So because I don't know, the rational thing to do, which most people are not rational in markets, which is why most people, have just a blow up experience in trading. Just the rational thing to do, in my opinion, is to say, okay, I think the markets are likely to do this. Let me risk manage in case I'm completely off on this. That's all we can do. Because there's going to be people who comment under this video and all over the internet who are like, no, the market's going to crash for sure this time. It's going to happen. And there's also going to be people who say, this is 100% just going to rebound on Monday. Can we just make the collective decision here on my channel? Maybe we can't. But my hope would be let's just have the humility to say, we don't know for certain. We might have an educated guess, but educated guesses are different than the people who are certain that the market's going to make this move or this move, right? Those people are going to blow up, whether it's this time or the next time after that. Those people will blow up in markets. The ones who are left behind, I've been doing this since 2018 on YouTube. I've been live streaming. I've been trading for, almost 10 years at this point. The people who are still doing this a couple years from now will be the educated guess people with small risk management. Okay? Rewind and listen to that again if you need to, because the only people who will be still trading in the few years from now are people who have rational decision making, who know they're not for sure going to know what's going to happen next, and instead just manage risk appropriately. So the question is Bitcoin a dip buying opportunity? In my opinion, yes. In my opinion, I think the educated guesswork is that this freak out, there was a big deleveraging event. A bunch of people rushed for the exit. That is usually, not always, but usually a good time to start looking at, okay, if everyone's panicking and we get some better prices and the fundamentals from Friday have not really changed other than the tweets here, maybe this is a buy the dip opportunity on Bitcoin too. Again, the differentiator here is if you think it's a buy the dip opportunity, you do what you want. But if I think that, here's what I think. I might buy a little Bitcoin with a small risk on the trade, and I'll cut it if it doesn't work. That is the difference between traders and gamblers. Traders rely on edge over many trades and small risk per trade. Gamblers believe they know exactly what the market's going to do, and they throw a huge bet on the line. And if they're wrong, they lose everything. And if they're right, they think they're a genius, and then they lose everything on the next one. Don't be that person, because a lot of people are doing it right now. I know I ranted on that, but it's an important lesson, and I hope that that resonated with some people because, again, that is the lead difference that I see between people who make it long-term and people who do not. Let's keep going just for a second here, see what else we've got on our top setups page here. Again, let me know, guys, also, if you made it to the end of this video or to where we are, we still got more to do. Let me know what your thoughts are on the new scanner. I've worked all week on this. I'm really excited to have something that I think is just easier to read. For context, here's where we're coming from, right? So if I look at the Forex scanner here, this to me, I looked at it and I said, this is overwhelming. This is so much stuff all at once. This is no longer a simple screening tool, which defeats the whole purpose of the Edge Finder. My goal with the Edge Finder is to make it simple so that anyone can pick it up and say, okay, what's your software thinking? Okay, the Edge Finder's getting a bullish reading for NASDAQ, technicals bullish, institutional activity bullish, crowd sentiment, we're getting a bullish signal here. Inflation data looks okay. You see what I'm saying? That's how simple it needs to be. And that is my promise to Edge Finder users. As long as I'm running the ship, I'm going to continuously make this thing better because I love it and use it myself. So that's the idea. Anyways, another thing I wanted to show you guys here was the Bitcoin to gold ratio. On Friday, Bitcoin was taking the lead here and then got squashed on Friday, as you might expect, right? Bitcoin to gold ratio started to move lower. Now, what this suggests here, when this thing is trending down, we call that a risk-off environment. When this thing is trending up, we call it a risk-on environment. That means Bitcoin is outperforming gold. When it's going down, it means Bitcoin is underperforming gold. And so we saw a little bit of bullishness going into this past week. And then, of course, the Friday news drops, freaks everyone out. And we went back into a little bit more of a potential risk-off environment from here. We also looked at the AAII Investor Sentiment Survey. And I also wanted to do a little bit more annual seasonality with you guys because I do think gold is going to fight an uphill battle here in terms of seasonality for the rest of this year. I know we had a big scary news event, but I actually think that that could have been sort of I think we may be towards the top end of where gold is going to go this year. That's my opinion on it. I've been bullish pretty much all year long. I'm not, shorting the market by any means when it comes to precious metals, but I do think that the upside, the easy money in gold, in my opinion, for this year is probably behind us. If seasonality has anything to say, it would suggest that we go sideways for the rest of this year, sort of just consolidate, maybe have a little bit of a pullback, which I think a lot of gold traders, a lot of the practical people who have been watching gold from a higher time frame perspective probably would love a pullback in gold. Like a healthy pullback on gold prices brings you down to the 38.2 to 61.8% retracement, giving us a healthy kind of correction. I do think that this is very possible, although it might not be coming this week or next week. It depends what happens with all this tariff stuff. If that's going to stay traumatizing to the market, we could just continue to melt up here. So I have no interest in shorting it, but would love to see a pullback in this precious metals world. Silver, same thing. I mean, this thing is just on a rocket ship to the upside. Healthy pullback would be amazing if we could get it. But again, you might not. We're at $50 an ounce. This thing seems to be moving like a steamroller down the tracks. Not trying to call the top on this one whatsoever. Let's take a look at Bitcoin. Bitcoin tends to have a strong end of year rally. It's another reason I have my eye on Bitcoin. I think there's a potential for, a risk to reward profile that looks good on Bitcoin. So I am watching Bitcoin prices going into this week for a possible dip buy here. We completely fell through this level. I was watching it on Friday, and to be completely honest, I didn't get to the chart in time. I would have probably looked at this 50% retracement a little bit closer, and I would have stopped out if I had taken that trade. So I didn't. Not because I chose not to, but because I didn't get to my charts in time. I was doing things throughout the day. I usually only trade for about an hour a day, but there was so much dramatic price action on Friday. By the time I looked at it, the thing had already dropped through these levels. From the area that we kind of have traded down into, I think this is a strong area of support. We'll see if it can hold. Watch the reaction around 108,000. If we come down to this area, he did get some reaction from this area on Friday. Now we've come down here. So if we can trade into this area on Monday, I may take a small stab on Bitcoin longs. Weekly chart still looks intact to me. Ethereum, also looks pretty intact from a big picture standpoint. If you're, thinking that this is going to draw out into something bigger, of course, Ethereum had a big drawdown in, most of this first part of the year. Actually, that was a huge drawdown. I had no idea it was that big, 64%. And I think that's why I don't do a lot of crypto coverage beyond just Bitcoin and Ethereum on my channel here usually. But I know that a lot of the, let me just explore some of the, like XRP, oh my gosh, that was such a dramatic drop here. 43. Oh my gosh. Yeah, it was a rough day for the crypto crowd. So we'll see if we can get a bounce back on that one in the coming week. And again, I think it will probably move in tandem with what happens with the stock market. Cryptocurrency and stock market correlation is still very high. Anyways, guys, that's all I've got here. Before we end the video, remember, you can check out the Edge Finder down below in the description if you're interested, or if you want to join us inside of our Telegram channel, you can scan the QR code that you see on your screen right now to join us for free trading ideas, analysis, and trade setups throughout the week. I know we just had a 42-minute long video. Sorry for it being so long. We had a lot to talk about today. If you want to stay up to date with trade ideas throughout the week, simply scan the QR code. Come join us in the Telegram channel. It's a great spot to be. Like, for example, the post that I made freaking out about what was going on, and then our research team put together some charts and research throughout the week. Again, it's a free spot to learn a lot about macro fundamentals. If you don't have the time to watch every single video, this is a great way to stay up to date with sort of a daily Reader's Digest. Anyways, thank you very much for watching, guys. Have a great week ahead.